foreign stocks. Okay, we're going to see. I've grouped the stocks together. This is the FTSE. Notice that bear market pattern where the red line's above the blue line, above the yellow line. It's extreme. That blue line cross took place 3 months ago. The double death cross took place 1, 2, 3, 4, 5, 6, about 7 months ago. The FTSE is a very sloppy looking chart. It's extremely negative. If you notice the RSI, which is the first arrow of the indicators below the chart, you have this like snake-like pattern. That's a very weird looking. I've almost never seen this. And that can go on forever as far as I can tell, and the market can keep going down while it's going on. So there's no relief that, we hit a bottom and we're going to go up now. So this market is in very bad shape. Don't move to the UK is my advice. And if you see below, once again, since last summer, the DMI is telling you there's been a strong sell signal and nothing is dissipating yet. So this can go on for months and months and months. Go on. Okay, the German DAX, Germany was a strong market. Notice that the bear pattern has begun there, all the way on the right side of the price chart. The red line's above the blue line, above the yellow line. That cross took place in January. You notice it was a double death cross. It didn't really fail. It didn't fail because the golden line did not cross the blue line again, the 50-day or the 10-week and the 40-week. So it was just a matter of time before we got the bear market pattern, which we have. Everything else about the chart is negative. All the technical indicators are negative. And once again, it's been in trouble since last August. Okay, the euro. The euro is trying to rally. David's negative on it, but I think dollar is trying to fall and euro is trying to go up. It was in an anti-bubble, or a contra-bubble, not an anti-bubble. They're different. And notice the RSI and that technical indicator is now going above 50. We have sort of a flat base, that line of pricing. The 50-day is trying to cross that 200, and if it does, it could easily cross that red line, the 325 or the 65-week. So you get that double golden cross, then it will be turned bullish, and that can happen in let's say several weeks, maybe 2 months, something like that, or even less. So you also are trying to get a buy signal down below in the bottom of the chart on the DMI. The MACD is trying to rise above 0, which would be bullish. In fact, the blue line has just touched 0, just gone a little above it. The RSI on the top has gone above 50, which is also bullish. This is trying to turn bullish. And the Swiss franc follows the euro, and it's actually worth something, unlike the euro. So if you're going to buy one of them, buy the Swiss franc. Don't buy the other one. And the Swiss franc's quite cheap. It's gone to 95. That's really, really cheap. So it has that death cross in that first arrow. Then it has the, it tried to bounce and make a golden cross in the second arrow, didn't succeed. It's not turned bullish yet. Once you put it to absolutely turn bullish, that gold line has to cross both the blue line and the red line, which is it's not going to happen next week. So, but the indicators are trying to look better. And watch that DMI, that pattern with you have like this intersecting snakes with the blue and red line and the black line below. That can be a change pattern where you can get a rapid change in one direction or the other. Next. Okay, the Nikkei is falling apart. This, like the NASDAQ, held up. The Nikkei and the NASDAQ have very similar chart patterns, which is interesting. And the French market also, the CAC 40, also had a similar pattern. And these are holding up the whole global system, except the NASDAQ's like about to go, and the Nikkei is about to go. Notice that blue line is about to cross the red line, just for NASDAQ. Once you have that, you've got the bear market pattern in Japan also. Everything else about this chart is negative, so the chances of that cross are like 99.9%. So Japan looks like it's in bad shape too. Next. Okay, the yen, if the Japanese market is going down, the yen has to go up. The reason the Japanese market went up is because the government drove the price of the yen down. and now they can't do that anymore. Notice that RSI, you see this rising RSI, it rose above 50. It was that each bottom was getting higher and higher and higher and higher. You see like a breakout just like gold. Look at the gold chart when we get to it. It looks somewhat similar to this. You see that gold line actually cross both the red line and the blue line. So this has the double golden cross. It needs like the moving averages to line up where the blue line also crosses the red line. Then it's like completely bullish. So watch the yen. If that happens with the yen, that means the Nikkei and stock market is totally bearish. So this confirms that that's the case.